Well, we're excited and up right here at the National Real Estate Cafe with Don Gatling and Gino Ferranti. We get a daily dose of real estate and financial updates, and we're not the only ones up. That means rates may be going up too.
Rates have been going up. If you haven't been paying attention, maybe you have a HELOC, home equity line of credit, and you've been seeing it creep. Well, it looks like that trend's going to continue, doesn't it, Don?
All right, let's flip to the slide here. Goldman Sachs, Fed to raise rates once a quarter until 2019. I think that might be pretty accurate this year.
I think this time they got it right. You know, before we were saying they can't raise them that fast, they can't raise them that fast. I'm starting to feel like this economy's hot and it needs the Fed to raise rates.
That's right. So we'll go to this second slide here. Basically, they're projecting that the Fed funds rate, which is kind of your base rate, and then there's a margin added to it. Right now, we're at 1.75%. They think it's going to go all the way to 3.25 to 3.5%. That's a pretty dramatic increase.
Yeah, so that puts most home equity lines of credit, you're probably going to start to see most of your interest rates somewhere between 6 and 8%. Not bad historically, actually right back at where historical interest rate levels are. We are moving back to historical interest rate levels, and it's not a bad thing. That means we live in a healthy economy.
That's right. So, and also to clarify, when the Feds raise rates, it is not mortgage interest rates. Those are controlled by mortgage-backed securities. What it is controlling is your HELOCs, your car loans, your credit card loans, your shorter-term loans. That's what is controlled by the Fed funds. And if we're 1.75 going to potentially 3.25, that's a pretty big increase. So, like Gina said, your HELOCs are going to start inching way up. You may want to look into potentially fixing that.
Particularly if you've been in your HELOC for a few years, because don't forget, at the end of sometimes at the end of 5 years, sometimes at the end of 10 years, they become fully amortized and that payment jumps. So while long rates are still low, would be a really good time to see if you could put the two together, get a great loan, and not just set it and forget it and don't worry about it. So if you want to find out more, email us at donandgino@gmail.com, or to get these on your phone every day, text NREC to the number 58885.
See you tomorrow.